What's up, guys? Welcome back to DCA. So what we're going to do in this video is take a look at where Bitcoin is at right now. So we've come back under $20,000. There was a lot of hope with the merge that we would get to see a market rally, that things would be positive coming out of the CPI reading that we had back here on September 13th. But unfortunately, inflation came in hot, and as expected, the stock market and the crypto market took a bath as soon as that reading came out, where inflation was higher than was expected. That's kind of what we've been talking about, is the fact that the crypto market is not acting in and of itself right now. The crypto market is, at the end of the day, until circumstances change, the crypto market is going to continue to be beholden to the broader economy. So when the Fed is taking a stance that it's going to continue raising interest rates, when we know that the Fed is going to continue pulling money out of the bond market, a stance of quantitative tightening, we're going to continue to see liquidity dry up in this market. And as we've discussed many times on the channel, there is a direct correlation between liquidity in this market and the overall directionality of the market. So when you have a huge number of market participants, when you have a huge number of dollars flowing around in these various assets, we're going to see that the price goes higher. Conversely, when we're seeing fewer participants, fewer dollars being traded on the asset, you see that the price trends lower. So what we're looking at here is the number of Bitcoin active addresses. And you can see that back here in April and May, we sort of reached this peak of around 1.25 million active participants in the market. And we were at a sustained high level, essentially from December all the way through May here. And then when we had this correction, we had this large price crash that we saw back here in May. This is when the number of active participants in this market plummeted. So, we lost about 60% of the active participants in the market in a very short order of time. Now, importantly, we did recover, and you can see that we've been sort of stabilized at around anywhere from 40% to around 20% of the participants in the market that we typically had back here in the peak of the market. Overall, that is a fair sign that, we've seen that type of recovery. And in fact, if you look right now, where we're at right here, we're sitting right at around 1 million active participants for the current week. Overall, we've retained a lot of the participants in this market. So there's been no real reflection in the price action. We've been doing essentially nothing but falling in price ever since, back here in November. So we've retained a lot of the active participants, but we're still continuing to see a drop in price. And that's going to be for multiple reasons. So another metric that we look at is this here. This is a measure or an estimate of market liquidity. So this is the price volume index for Bitcoin. We're looking at the Brave New Coin Liquid Index, which is a summation of many of the largest crypto exchanges. So this gives us a good idea of how many dollars are being traded on this asset. And you can see here that, essentially since we reached this peak back here in May, we've come down around 80% or so from the peak liquidity in this market. And the reason that this is important is because of the fact that these risk assets are heavily dependent on market liquidity. That's really the fundamental reason why these markets have been so bearish over the last 8 or 9 months or so now. It's because of the fact that the policies that the Fed is pursuing are just extracting liquidity from the market. As there's increased risk in the market, you're going to see people sort of pulling away from these risk assets like Bitcoin, a lot of the tech stocks that we've seen really struggle over these last few months. You're going to see money coming out of these markets and moving into safer assets or just sitting in cash on the sidelines. So that's kind of what's been going on right now. So we see that, this trend just continues to fall. Now, we have leveled out quite a bit. But, we've seen ourselves level out, at least in a more local sense, multiple times now, and then just continue down from there. So right now, we're down around 80%. So we are near this level down here that we've hit multiple times, but then bounced off of it. And so, we need to continue to see ourselves hold that level. But, like I said, we've done this before. So back here in late 2021 into 2022, we basically did that in December, January, February, and then March, and then we finally fell below in April. before getting this big spike here in May. Now you'll notice that when we have these large price corrections like here in May and then here in June, you'll see a spike, and that's because people are trading the asset, yes, but what they're doing is selling. Okay, so you have a huge number of people running to the exit. So the two times that you get increased liquidity in the Bitcoin market are during price runs when we're moving to the upside, and then also during times of capitulation. So what a healthy market would look like is something like we saw back here at the end of 2020, where the liquidity is rising, but it's rising steadily. All right, so that's what we need to watch for in this market. And that's what we're going to want to see before there can be any suspicion that the market has entered into an uptrend. When we had this crash back here in June, we came down to this low of around right here, right at around 17,500. And from that time, we were forming this nice uptrend. All right, but unfortunately, we broke below back here in August and then sort of hit this level as resistance all through August and then again here in September. And so right when we got to this upper resistance level that we hit from this uptrend, we got bounced right off of it. Now, I don't think it was coincidental that that coincided with the CPI reading. In fact, I do believe that if the CPI reading would have came out differently, if it would have been below expectations, I think you would have seen us go on a big rally above this level and, continue this run, especially with the merge coming. Unfortunately, it didn't play out like that. So, we're just living under the current circumstances. And until those change, I think you're going to continue to see downward price momentum. So ultimately, what we're looking at now then is something like this. So we have this support level down here right at around, anywhere from around 18.5 up to around 19 to maybe 19.5. There's probably going to be support in that level, but this is a level you do not want to see us lose. All right. And regardless of what your stance on the market is, I think, it's clear we don't want to, you never want to go down and test, sort of a last level of support, kind of like this 17.5 level. So I think it's very likely, and you can see just based on the price action that we've been witnessing over these last several days now, ever since we had this drop the day of the CPI, the price action has not been great. We got rejected, and now we are trending back down towards this support level. And I do suspect that we'll likely come down and at least test that level. And I don't think that we want to see ourselves fall below it. Okay, so that brings us to this chart. And what this is showing us is the relative number of coins held at every price level. So we're looking at these prices, and each one of these bars that we're seeing over here is a $500 interval. So for instance, right here, we're at $20,500. You can see that there's approximately 600,000 Bitcoin being held at that level, and so on and so forth. The color is actually representing the age of the coin. So we have 4 different ages here. We have pink coins, which are going to be very young. These are brand new coins which have been traded within the last 90 days. And this makes sense, right? We have only been in this range here from around 25K down to around 17.6 for a very short amount of time. Almost every single coin in this range falls into the pink category. Now, you'll notice that there are a few other coins, yellow and blue. These are going to be older coins. So the blue coins are going to be coins that are at least 4 to 8 years old, all right? And so when you notice that right here, we have a few coins right here, right at 20K, right at 19.5, right at 19.5, 20, and 19,000. And then at lower prices of 18, 17.5, all the way down, etc. And then the yellow coins are going to be 1 to 2 years old. So where are those coins coming from then? So those coins that were purchased, in the 20K, 18K, up to 19K range 4 to 8 years ago, they were purchased right here. And then we have a few of those older coins that are 1 to 2 years old that were purchased right in this zone, right at the end of 2020. Okay. So that is where these older coins that were kind of purchased right in this range that we're looking at right here, because recall, we're kind of zoomed into this more local level right here. But some of those older coins, they were bought back in here, back in this range here, at these points. So right at the market peak and right as the bull run was getting kicked off. What we see is that there are a very large number of these pink coins. And these are, like we said, the very young coins, 90 days or less. Now, what we need to do though is discount these pink coins because these are short-term traders. Short-term traders tend to not have a strong impact on the areas of support and resistance. And that is just for the fact that these guys come in and they leave the market based on very small price changes. So if they enter at 20K and the price goes up to 21K, 22K, it's very likely they will take profits because they're short-term traders. So that's not to say that they cannot be long-term holders because we don't know, necessarily when we're sitting in this range here, we don't know which percentage of these guys are going to be short-term holders and which percent are going to be long-term holders. But what we do know is that on a daily basis, short-term holders make up a large majority of the daily trading volume. Okay. So what we need to do then is kind of look to these yellow and blue bands. So remember, these represent coins that are 1 to 2 and then, older. So these are 1 to 8-year-old coins. And like we said, we have a lot of people that have bought coins back at the prior all-time high in the 2018 market cycle. And so that becomes a psychological level of support, all right? So, we're talking right at around 19.5 up to around 20K, all right? And that's exactly where we're sitting right now. And you'll notice that we do in fact have a fair number of coins sitting right at that level. That's one level that we need to watch. I think this is going to be one of our most critical levels, is right at this $19,500 level. There's, a fair number, about 125,000. And then right below it, you have maybe around 75,000 up to maybe around 100,000 coins sitting between 19K up to around 19.5. And these coins, like I said, they're in yellow, so they're going to be 1 to 2 years old. So this is going to form a level of support for us. Now, when we start to look above us, since we're below it, it's actually resistance now, right at this level here. So we're looking right at around 24K down to around 22.5. And that's exactly what you've seen. You've seen that every time we come up to this level where we have these yellow coins, because remember, when you're below a level, it's going to act as resistance when you're coming into coins because people will want to get out of the trade at even, especially if they've been sitting at a loss. So when we come up to this level, you've seen that we have in fact got rejected off of it. We've been rejected off of this, 24.5 level now multiple times. So we came up here in July, then again in July at the end, and then in August, and rejected each time. So between that, and remember, we're discounting the pink coins here, there is not a lot of volume. So we're talking right in this range here now. So between this level, so right around here, you'll notice that there's no yellow coins kind of right in this 20K up to around 22.5. And so that's why we've kind of freely moved through this zone. Every time we get into this level, we kind of go right up to this resistance zone right at around 22.5. And sometimes we get above it like we were able to do back here in July. And like this time, we were firmly rejected off of that level. So we're sitting at a support zone now. And what is going to impact this market is going to be what happens with the stock market, what the Fed is going to do with interest rates, etc. So I think another critical day is going to be when we come to, the federal funds rate decision from the Fed at the end of September here. I think if things, for instance, if they came out with a 100 basis points hike, I think that's how you see us break below this support level that we're sitting at right now. And so with that said, let's consider what's below us and where we may form areas of support. So we know that, we're sitting, like we said, right here, right at around 19.8 at the moment. And where do we have areas of support below us? Well, you'll see that there are a small number of coins, there's not a huge number by any means, all through the 10K up to around 20K range. So you maybe have about 1 million coins or so, anywhere between this zone, all right? But it's really not until you get down to around 12K that we start to run into a large support zone. Now I will say there is a fair level at around 14K and again at 16.5. So those are two kind of areas where if things got really ugly, and I'm not saying they necessarily will, but it's at least always good to be cognizant of what we should be watching for and where these areas may form at. Because, I know a lot of people have trepidation about what's going on in the market right now, and it just feels like it's going down and it's going down and it's going down and it's never going to come back up. So having some sort of sense of at least what's possible, I think can help calm your nerves as we go forward into this market. And knowing where these potential areas of support and resistance will play out is highly dependent on where you have holders, because those holders are ultimately going to form areas of supply shock. And if it's not in the long term that they do so, at least in the short term, you may hit an area of, a sticking point at these levels. And so we see that at around 16.5 and at around 14K, and then down at around 12K, those are going to be our real areas of support as we move down, if we were to move down. Now, there's a lot of belief in the market at the moment that we are kind of at a bottom, that we've reached the bottom at around 17.5. Now, I think that there is a lot of evidence to support that idea. However, and, I've said this once, I'll say it a million times. I don't believe that just because the market has played out in a certain way in the past, based on a lot of the things that we look at all the time on this channel, just because things have played out in a particular way in the past means that they have to play out again that way this cycle. And that is for the fact that, regardless of whether people want to be accepting of this fact or not, the macro factors influencing the market right now, in my opinion, are the most important factor in the market. It's not going to be sort of price levels that we've hit in the past and, we're seeing those levels again. It's not going to be anything like that. In my opinion, whatever's happening in the macroeconomic picture is going to influence the crypto market and is going to be the predominant factor in the crypto market. I'm not saying it has to be like that for years and decades to come, but at this moment in time, that is what is influencing this market. And so that is going to have an outsized effect on the price. If things were to get absurdly bad, for instance, in the stock market, if we just come look here, we're right now, and we're looking at the NASDAQ here, we're right at around 12K. If we were to go back down to around 11K, I can almost assure you that Bitcoin is going to go at least to this prior low back here at around 17.5, if not lower. And if we went down to this 17.5 level, that is precisely how you could see us quickly start to head down and test some of these lower levels. So, like I said, I'm never going to be that guy who's going to sit here, come on my channel and tell you we have to go down or we have to go up. The way that I approach the market as an investor is to accept a certain level of uncertainty and then to react to the market accordingly. So I don't know whether we are at the bottom or not, but I'm sure as hell not going to ignore what's below us just because there may be some evidence supporting the fact that we may be at the bottom. Just like I would never ignore what's above us just because the market is looking poor. So I'm always approaching the market in a way such that I want to know what's above me. Where could I see the price break out to? Where could I potentially see a resistance level format? And just like I'm going to do that, I'm going to know where are my areas below where I'm at? Where are my areas of support going to be? Where are my areas of resistance going to be? I'm constantly looking at the market, attempting to gain a general perception of what is below me, what's above me. Because at the end of the day, anything can happen in these markets. So there's so much uncertainty in the market right now, so many things going on that are so much bigger than the crypto market, that to just look at this market and say that, this is going to happen and I'm convinced that this is going to happen and I'm going to sort of approach the market in a way such that that is the only thing that can happen. I think that that is a more novice way to approach the market. And ultimately, it may work out for you once in a while, but if you want to be a successful investor in the long term, having an idea of what's happening and understanding trend shifts is a much better way to approach the market, because that way you have a plan in place and you're prepared regardless of which way the market breaks. That's going to be it for this one, guys. And I also want to say today is the 1 year anniversary of my YouTube channel. It's been an absolute pleasure making these videos with you guys. I've received so much love from you guys, and I appreciate you all so much. I literally and obviously couldn't do this without you guys. So thank you guys, and until next time, see ya.